Most traders pick a prop firm based on hype, but don't actually understand the rules they're signing up for. And that's exactly why they keep failing challenges and struggling to get paid. In this video, I'll break down the exact differences between futures and Forex prop firms and why I personally avoid futures. So we're going to take a look at one of the biggest prop firm companies in the space. One is going to be for futures, one is going to be for Forex. Ones I'm going to be looking at is FTMO for Forex and Alpha Futures for futures. So the first rule that I think is absolutely crazy that the futures prop firm industry applies in most of the firms is the trailing drawdown rule. So you see here on a 50k account, doesn't matter if it's a zero plan or the standard plan, the maximum drawdown will be $2,000. But if you look a little bit deeper into the actual rules of the maximum loss limit, you will see that it's a trailing drawdown, meaning that if you start with a 50k account, doesn't matter if it's standard, zero, whatever plan there is, they're all applying the same rule. Your drawdown initially will be 48,000, which is $2,000 drawdown. So if you make profits on that account and you make $500 profit, your account will be at 50,500. But then the problem is that your maximum loss limit actually goes up as well. So your drawdown always goes up the more profits you make. So your drawdown is never going to be more than 2,000. Then the problem is that if you have a losing streak or you lose again, your account balance would go down, but your maximum loss limit would stay the same. This doesn't go down with it. Here is where they trick a lot of traders, and this is how many funded accounts on futures prop firms get blown, because in the end win streaks will happen, but losing streaks can also happen. But if you compare this now with FTMO, for example, the maximum loss limit would be 10%, but that's only from the initial balance. So if you start off with a 50k account, your maximum loss limit will be 10%, which would be $5,000. So it would stand at 45,000 and it would stay there. So if you make profits on the account, drawdown will just even increase and you'll have more room and more buffer. The next issue I see with futures prop firms is that the drawdown limit is also very low. So from a 50k account, you have a $2,000 drawdown, which is 4%. But if you compare that again with a company like FTMO, you will see that the total max loss limit will be 10%, so more than double. And yes, they do have a daily loss limit. Even the daily loss limit alone is already more than the maximum drawdown limit on a futures prop firm. And again, like I said earlier, they at least don't trail your drawdown. It just stays at 5 and 10% of the initial balance. So the more profits you make, the more room for error you have and the bigger your drawdown limit will be. Another thing that I definitely don't agree on is having to pay a monthly price just of having the privilege of trading this account. But what this basically does is that it forces traders to try and finish challenge as fast as possible because they don't want to be paying multiple months just for one trading account and waiting until they pass it. Which again, comparing to this Forex prop firm, is that it's a one-time payment. As you can see right here, it's a one-time payment that is going to be refundable once you pass the account and you ask for a payout. Then you will get your money back of this account. So basically, if you pass this account, you have traded and achieved this account basically for free. The next thing that I'm actually not a big fan of as well is these consistency rules. Now 50% consistency rule just means that on a single trading day, you cannot exceed 50% of the profits of the profit target. So your profit target is $3,000. In one single trading day, you're not allowed to make more than $1,500, which just means that if you're a scalper and you take multiple trades, even with low risk, you can hit that profit target of 50% already in one single day. You have to limit yourself and they just don't allow you to actually take good winning trades, which again is something that doesn't even exist in the Forex prop firm space. Another thing that a lot of futures prop firms apply is an activation fee. So once you paid the monthly price for this account and you manage to pass the trading account somehow, after you've passed it, you still need to pay an activation fee, which most firms do. Now in this case, Alpha Futures have created a no activation account, which is good, but then obviously the monthly price increases quite a lot from $120. Comparing it to an account that where you have to pay an activation fee, it's $79, which again is something that doesn't exist on Forex prop firms. It's just a one-time fee that is refundable after you pass the account and achieve one single payout. It could be a payout of as small as $5 or $20 or whatever it is. You will get a refund. Another thing is for payouts, where they require a certain amount of profitable days achieved in order to actually apply and request a payout. So you can see here, you need to have 5 winning trading days of at least a $200 profit. And if you don't achieve that, then you cannot ask for a payout. But if you compare that, for example, again with this Forex prop firm, they don't even have that. It's just 14 days from the first day of trading. Each 2 weeks, you can apply and request a payout. They don't ask you or they don't require you to be profitable for a certain amount of days. It's just every 2 weeks, whatever profits you have in your account, you can withdraw it and you will get 80%. Like they mentioned here, every 2 weeks, you can request a payout and you will receive 80% of the generated profit. That's just the only rule they have. And lastly, many futures prop firms actually put a payout cap, where many times I've seen that you can only request 5 payouts before they change you to a live account. account, where the rules are again very different, and it's definitely not in your benefit to trade live accounts. But it looks like that Alpha Futures actually allows you for 5+ payouts, which is pretty good, and it's an improvement if you compare that, for example, with another company called StopStep, where they only allow you of 5 payouts before they change you to a live trading account, which is definitely not an improvement. And again, comparing that with a Forex prop firm, they literally have 0 limits on payouts. You can request as many payouts as you want. There is no cap at all, and they will even scale you as well after some time. Like they mentioned here, they do have a scaling plan. So after a certain amount of time that you've been profitable, they will increase your trading account by a certain percentage, just because you've been profitable for the past 3 months, let's say, and you've met certain requirements of profits that you've achieved in terms of percentages on the account, and they will just increase your account. At the end of the day, it's not all just about trying to pass a challenge. It's about being able to actually make money after. And if the rules are working against you, your strategy doesn't even get a fair chance. So choose the right prop firm based on how you trade, not just based on what's popular on social media. So let me know in the comments down below your take and your experience on both futures prop firms and Forex prop firms. Hope this video was helpful to you. I will see you in a next video.